Well, good afternoon, everybody. My name is Rich Harvey, CEO of Propertybuyer, and I'm here today joined by Terry Ryder, the Managing Director of hotspotting.com.au. Welcome, Terry.
Hello, Rich. Always look forward to these discussions. For some reason, we always get the best numbers for webinars when it's you as the key speaker. So obviously people like something that you do, or you have a high level of credibility. Must be all those awards that you win.
Well, actually tonight, talking of which, we're up for the Real Estate Institute Awards again. We're up for another 5 potential accolades tonight, so we'll find out and see how we go. So,
yeah.
But look, getting on with the show, obviously everybody, there's a lot of conjecture in the media about what is actually happening in the property market. Obviously this week we've had another 0.5% rise by the Reserve Bank, taking the cash rate to 2.35%. We've got the unemployment rate now sitting at around 3.4%, one of the lowest ever rates we've ever seen on record. And we've also got a lot of potential buyers sitting on the sidelines, just knowing not quite what to do and which way to move. And often the buyers are thinking, maybe I'll just wait and see what happens. Maybe I'll just wait to find out when the bottom of the market's going to be. So there's lots of confusion. So today, what I want to address is a range of topics, and I'll just share my screen again on all of those things. So just give me 1 second and share. So today I'd like to have a look at what's going to be happening with migration numbers, and I'd like to do a bit of a deep dive into that with you, Terry. Talk about one of your famous quotes, the exodus to lifestyle, and see if that's a trend that will continue or whether that's over. Talk about infrastructure, where are the best and biggest infrastructure projects and the impact on the market, and what's happening with this whole work from home phenomenon, where the jobs market is going to be going. And then also touch on rental rates, which are really literally going through the roof. But the overall theme, as we've talked about, Terry, in this webinar is the future drivers of the property market. You know, we've often seen that, you need to buy where there's population, infrastructure, and employment. They've been the 3 critical staple diets of property price rises. But Terry, just to kick off, let's talk about migration numbers. We've seen last week there was the Jobs Summit, and the government made an announcement of an extra 35,000 people over and above the cap of 160. So what's your take on that increase and what's happening in the migration world at the moment, Terry?
I think it's incredibly significant. We've been through quite a remarkable property boom, which has impacted most parts of Australia for about the past 18 months to 2 years. Still going on in some parts of Australia, I would point out, but not in others. And that's happened at a time when the borders were closed. Primarily. For most of that time, the borders were closed and they've only recently reopened. And so I think it's significant, firstly, that the borders have reopened. And so we now have migrants starting to come back in, and we have overseas students coming back in. And one of the impacts we've seen from that is a very sharp drop in vacancy rates in those inner city areas that previously had high vacancies, primarily Sydney and Melbourne, and rents starting to rise very sharply there as well. So that's been, we've already seen from that how impactful it can be to have migrants. Now they're proposing to, because we have this skills shortage, a lot of businesses' biggest problem at the moment is they cannot fill the positions they have available. Another 35,000 migrants, and that's clearly going to have a big impact on property, because we already have a situation where people seeking a tenancy are finding it very difficult. We have vacancies lower than I've ever seen. I've been doing this for 40 years and I've never seen vacancies this low in so many places. That's hugely significant. And the question I don't think the politicians have thought to ask, and the industry is asking, is where the hell is all these extra people going to live? Because
that's a topic for another webinar. I think we should actually get some politicians on here and say, look, how do we solve the housing crisis? Because it's honestly, it's just going to get worse, Yeah. And if we look back, actually, just for now, I'll just mention, well, sorry to interject, but one thing I'll say is that back in 2019, the migration rates were around 247,000 people. And as you say, during COVID, it was completely turned off. So in my view, there's a lot of catch up that needs to happen. And that's reflected right on our very, very low jobs unemployment rate at the moment. So it's a pretty difficult situation. So where do you see the migration numbers going? Do you think now that the government said, hey, we've got these extra 35,000 places, do you think they'll just turn up by December and be here, or do you think it's going to take a bit more time?
Look, I honestly don't know how long it will take, although I do know that, anecdotally and from media reports, there's a lot of people very keen to come to Australia. It's seen as a safe haven for all sorts of reasons, but particularly economically. At a time when there's a lot of unrest in the world, there's war in Europe, there's all sorts of strife in Asia, Australia is just a safe place from, the point of view of physical safety as well as a safe place economically. Mm-hmm. So I think they won't have any trouble finding people wanting to come to this country. The problem is going to be finding places for them to live. But I mean, from the viewpoint of most of the people who are going to be watching and listening today, who are investors or potential property investors, this is all good news. The people for whom it's bad news is people who are out there who need or choose to rent. About a third of Australian households are renters. And it's a pretty dire situation at the moment. It's only going to get worse for them. Yeah. But it's a pretty attractive equation for property investors, because it means rents are rising at a pace that I haven't seen before. And this is so opportune because it's happening at a time that interest rates are rising, but this is a huge compensating factor. And when you add it all up, it's a great opportunity for property investors, for those who can avoid being spooked by all the negative media and see the opportunity and understand also that Australia's not one market. There are still markets in Australia that are rising, where activity is still strong and prices are still rising. And when you put that together with the situation with rents and yields, it's a time of great opportunity, because a lot of people are sitting on their hands, like they did when COVID struck. We'll wait and see what happens.
You were just talking about that just before the webinar started. You were likening this particular time now in this sort of late winter, early spring, was to be the same as around March 2020 when COVID first hit, sort of heading into the next level of unknown. Is that how you characterise this particular part of the cycle?
Yeah, it feels very, very similar, because one of the similarities was back then, and we're going to look at this in a little bit of detail later, a lot of the usual suspects were forecasting a big drop in property prices when COVID struck. And a lot of people decided to wait. And of course, what we got, in fact, was the beginnings of a property boom, and prices rose in 2020 and they rose more in 2021. And those who waited and thought, I wish I'd taken action back then when I planned to, because they were finding themselves paying 20% more for the same property when they finally did take action.
Yeah. That's
right.
And
I would urge people not to make the same mistake again, because, as I said off air just 10 minutes ago, Rich, I've just bought another property. I settled last week, and now I'm looking for the next one. I see wonderful opportunities in locations where I don't expect to see any price decline at all. Prices, I think, the places that I'm targeting are going to keep on rising.
Well, just talking about migration, we've got a number of different factors that make up that 195,000, or what should be really 250,000 is what we actually need to get the jobs market flowing again. But there's a lot of students that are starting to come back. Australia is a great net exporter of education services. And the government's done something to actually allow students to extend their visa so they can pick fruit and serve coffee and do other things like that, which is a great idea. But a lot more needs to be done. The government's throwing $35 million to the Home Office, Federal Home Office, to try and process all the backlog of applications. But unfortunately, as much as the government signs off and say, hey, yeah, let's let all these people in, the logistics of actually getting them in and processing them takes many, many months. And I work with a couple of groups and a couple of migration agents, and they're saying it's a bit of a dog's breakfast in getting people through. But they will get through. We definitely are attracting highly skilled migrants, and they will come. They'll probably rent for a year or two, and then they'll buy. So for anyone out there who's an investor, this is very good news, because as Terry's alluded, they need a roof over their head, and that's going to help to underpin our natural population growth, but it definitely needs to be supplemented by a large number of migrants. And we have a fantastic multicultural society, and we need to keep supporting that. But it does raise really big issues for the property market in the types of property we provide for not only migrants, but for everyone in Australia. So, yeah, I don't know how the government's going to make up for lost time over the COVID period, but I think, Terry, it's going to take, about 1 to 2 years or more to potentially get us back to those 250,000 migrants that we need. Do you have any thoughts on the time frame on that sort of supply level coming through?
Look, I think what you've just said sounds about right to me. it does take time, just because there's a bureaucratic process to go through, and what people need to perhaps consider is just how strongly our markets have performed when that tap was absolutely turned off, and it's now being turned back on. But it's going to take time to get to full flow, and just imagine what the situation is going to be in this country with vacancies and rents when we get to that point. And one of the things I'm saying to people actually a lot is, because people are now very mindful of yield because interest rates are rising. And one of the things I'm saying to you, well, there are plenty of places you can still get very good yields, and they happen to be places that have good credentials for growth as well. Some of the cheaper capital cities, some of the regional areas. But don't just calculate the yield on the day that you'll buy it. Think about what it'll be in 2 years' time. If you get, factor in a relatively moderate rental increase, because right now we've got parts of Australia where rents are rising 15, 20% a year. Factor that in, and so something that's 5% today, if you buy today at 5%, in a couple of years' time, it could conceivably be more than 7%.
That's great. That's a really good point. I think I'd like to touch on that a little bit down the track as well, but that's a really good point, Terry. Talking about migration, I want to just turn the conversation now to internal migration, and your favourite phase is this exodus to lifestyle. So with COVID, we saw everybody, flee the cities potentially and go, hey, I can work remotely, I can live in Byron, I can live in Bowral or wherever, and I don't need to commute. Do you think this trend is going to continue, Terry, at the same rate en masse, or is it slowing? What's your view on what's going to be happening to the exodus to lifestyle phenomenon now?
Yeah, look, I think it's going to continue. And, the term that I coined was exodus to affordable lifestyle, and the affordable is important. And it's, with the recent rise in prices everywhere, but prices have become even more prohibitive for people in the bigger cities. And so the motivation to take this move is as strong or even stronger than before. The thing I want to point out is that this trend was not caused by COVID. It had actually been underway for much longer than that. In fact, if you look at the population numbers, Sydney has been losing population to internal migration, people moving to other parts of Australia for 10 years now. Melbourne for the last 5. It became a lot more visible during the COVID period. Media really picked up on it and started writing it as if it was a COVID phenomenon. In actual fact, it had been going on for some time, and COVID made it more visible and perhaps sped up the trickle of population to a stampede. But it really wasn't about COVID. It was about technology and the pursuit of an affordable lifestyle. I made that decision 25 years ago, ahead of my time as always. But I asked the question, do I really need to be in a big city to do what I do? And the answer was no, I don't. I could be anywhere. So I wanted to be in a place that was more relaxed. We could get a park on the main street, all that, and more relaxed and more affordable lifestyle. And more people have realised that with modern technology, they can do that. And it works for them. It works for the employer, not for everybody, of course. But we're going to see more people making that choice because it just works so well. I've got a friend who's just had their first child, and for him having to go into work in a city office every day is now a problem. He wants to work from home, and I think there's a lot of people in various circumstances wanting to make that choice. So I think it's going to continue to be strong.
Okay. That's interesting. And the latest stats show that just over 50,000 people moved out of Sydney, Melbourne and other areas, and they migrated, not quite to be your neighbour, Terry, but to southeast Queensland. So we've seen, the Gold Coast, Brisbane and Sunshine Coast particularly boom in population. So are you seeing that sort of volume of people happening, and where do you think people are going to continue to move to if they move out of the cities?
Yeah, look, I think it's not just people moving out of the cities to the country. Sometimes it's moving from a big city to a smaller city, therefore maybe Brisbane, maybe Adelaide, maybe Perth. Hobart's certainly got some of that action. But people are also moving to coastal areas, but also to hill change areas, or just to good, strong regional cities like a Newcastle like an Orange. I think it's a wonderful sort of lifestyle city that people not. I think the ones that it's spread far and wide, but the ones that have got the strongest trend are the ones that are still within reasonable, commuting distance of their capital city. So, a place like the Central Coast has got a lot of people moving out of Sydney, Orange, Wollongong, the Southern Highlands, out of Brisbane, the Sunshine Coast, the Gold Coast, the hinterland regions, Melbourne. People have moved down to the Mornington Peninsula. They've moved to some of those hill towns north of Melbourne, where if you need to go to Melbourne, you can jump on a train and be there within an hour. I think that trend will continue because there's wonderful lifestyle towns, wonderful inland hill change places as well as sea change places where people can access all that.
That's great. I'll just make another point to backing up exactly what you're saying. So I had a client that I bought a property for on the northern beaches of Sydney in Beacon Hill 15 years ago. Now I helped them buy that property. It was a 4-bedroom plus study with a pool house for $820,000. We've just transacted on a property for them in Newcastle for $1.8 million. And we've also referred them to a selling agent to sell their house and they sold it for $2.45 million. So over that 15 years, their property has basically tripled in value. And now they can go and live completely mortgage-free in a home that's very close to the city centre of Newcastle, be close to their friends, and they're just over the moon. So you can, if you do it right, plan and have a really great outcome with your property journey. But it is about picking, not so much the timing, but picking the right location and the right sort of lifestyle that's going to work for people as well.
Yeah.
What I was going to say for everyone too, if you've got questions, I can see some people have put your Q&As down the bottom in the Q&A. Thank you so much. We will have an open Q&A session at the end of this. So please throw your questions in there. We absolutely love questions, don't we, Terry? We really find it makes it more interactive. So we're going to have plenty of time for Q&A at the end. So please just pop them in there and we'll get to all of those questions. Now, Terry, I want to touch on another topic, and that's around infrastructure. I want to ask you specifically, because you're a big fan of this, I believe, is where do you see the next big infrastructure projects going ahead, and where are they going to be located?
Yeah, I think infrastructure is an incredibly important driver of growth in property markets. Where I'm sitting is not far from the Sunshine Coast, and that's a great example of a market that it had a boom long before the national boom started. It's been a boom market for 3 or 4 years, and it was very much driven by a big infrastructure spend because it creates jobs, it can create construction projects, and people come to live in the area where it's happening and work on those projects. And then when the projects are finished, they add to the amenity. And in the case of the Sunshine Coast, a $2 billion hospital precinct that wasn't there before created a whole new industry on the Sunshine Coast, and that was hugely significant. So one of the tools people could use to find the next sort of hotspots, if you like, is to look for those areas that have the credentials to do similar things to what the Sunshine Coast has done. Toowoomba in Queensland is an example where there's a very influential major new infrastructure happening. But there are examples to be found right around Australia. And I think what's significant out of the COVID period is that it's very clear that one of the ways that state and federal governments want to generate economic recovery and growth out of the COVID period is through infrastructure spending. And so they are spending big. We've got national projects like the Inland Rail Link under construction. We've got big projects happening in all the major cities and many of the regional areas. Melbourne's got a massive program of infrastructure spending happening. Sydney, of course, has got everything that will be happening around the new airport out at Badgerys Creek and all the road and rail links. And the most influential thing of all for me is the huge jobs nodes that will spring up around the new airport, because lots of businesses always want to be close to the airport, and it's going to be a huge employment zone. That's where people want to live close to where they're going to work for those that aren't working at home. So that's going to be influential.
Excellent. So these infrastructure projects, they typically have a lot of impact on the local community in terms of housing supply and demand. So obviously we just mentioned the Badgerys Creek one. Now that's going to have not just an impact on the local community of Badgerys Creek, but the entire Western Sydney region. You talk about an inland rail route, that will benefit a number of different towns. But How significant can you rate these infrastructure projects? And you also released a recent report about sporting events as well. Maybe you'd like to touch on that as well.
Yeah, it doesn't sound like it's might have any relevance to real estate investment, but I think it's going to be huge. In the next 10 years, Australia's going to be hosting, excuse me, it's going to be hosting 5 global sporting events. An Olympic Games, a Commonwealth Games, and 3 World Cups. And they're all going to put huge focus on Australia. But more than that, in preparation for those events, there's going to be a big infrastructure spend specific to that event. And it's not just the sporting infrastructure that'll be upgraded, it's the transport links, it's the hospitality sector. Anybody in the tourism industry will be thinking, well, we're going to have an influx of tourists for these events. You know, we want them to come and spend money with us. So it's really going to generate a lot. One that's coming up that it hasn't really had a lot of airplay is in 2026, regional Victoria. This is the first time this has happened. It's going to be hosting the Commonwealth Games, which have just been held in Birmingham in the UK. And the Gold Coast had the Commonwealth Games in 2018, and the 2 years leading up to it was a massive construction boom that generated a property boom on the Gold Coast. So the boom happens in the lead up to the event, not after the event.
That was my next point I was going to make as well, that there's often 2 phases that I see where you get the most benefit from: the announcement phase, where something's going ahead and a lot of investors rush in and you can get that uptick. And then after the infrastructure is built, suddenly everyone realized, oh, it's quicker and easier and it's wonderful. We have a great community here. So it's often better to be an early adopter than really late, isn't it, Terry?
Absolutely. And, you know, the studies have been done in the wake of Brisbane, and not just Brisbane, but Queensland, in fact, winning the 2032 Olympics. There's some research done by various sources, and basically they found that the biggest impact comes in the lead up to the event, because it's the infrastructure spend and the jobs it creates and the focus that comes, because there will be people coming and going in preparation for that event long before the event itself is held. There'll be Brisbane will host major sporting occasions to test all the facilities. All of that will happen. And the research also indicates that the locations, the suburbs that are closest to the big venues also get some particular uplift as well in their property prices. And then, of course, in the aftermath, the host city, or in the case of the Commonwealth Games in 2026, multiple regional cities in Victoria will have all these wonderful facilities, and they'll have better transport links to Melbourne and all of that. They'll be repurposing the athletes' villages, as the Gold Coast did after 2018. And so there's lasting benefits if it's done well.
Yeah, right. Awesome. So I'd like to just move on to the next topic, and that's about job nodes and locations. You've kind of touched on a little bit with infrastructure, but got a couple of questions for us to talk about here. And I think most of us are probably at least working at home a couple of days a week. Before COVID hit, half of my team were working from home anyway, because we've got 25 buyers agents across the team in Sydney, Melbourne, Brisbane, Newcastle, Gold Coast, everywhere. So it wasn't really a big change for us, but working from home has been quite a big change for a lot of people, having to find that extra space in the home to have a quiet Zoom call and get away from the kids or get away from your partner. So my question is, Terry, do you think this working from home phenomenon is here to stay? Or do you think there's going to be more of a hybrid system in the future? What are your thoughts on that?
I think it's going to settle down into some kind of hybrid. I think, working from home is great for some, including their employers, because it's been shown to work. But it doesn't work for everybody and doesn't work for every business. So I think we're going to have a whole range of different situations. Somewhere, business will just require their team to be in the office. Others will happy for people. I know one sort of property advisory business, everyone who works for them is in a different part of the country. In fact, some of them are not even in Australia, but they all communicate with, like we're communicating now, and it seems to work for them. And then they'll be in the middle, there'll be hybrids where businesses will be okay with people working from home, but they want to see them in the office 1 or 2 days a week, because I think, I don't know how you feel, but there's probably really no replacing the, that face-to-face communication, being in the same room with people, seeing the body language. And
look, I can tell 100%. I was just in the Gold Coast and I visited my Brisbane team and Gold Coast team the last couple of days, and the level of interaction you have is just completely different to on Zoom. It's much deeper, it's more meaningful. There's just a better level of communication. So I think, in my view, we're going to be having a hybrid system of work where some days it's great, you can get to stay at home and get some writing done, but there's other days where you're going to need to collaborate and need to rub up against each other, and that's where it's a really good thing. But I've got another question for you, Terry. Like, I guess, is where, now that we've got this hybrid system of working, where are going to be the jobs of the future? Are we going to have, are the CBDs going to become redundant? Or do you think they'll become revitalised at some point in the future? And so where do you think the job nodes will be in the future?
Yeah, I think the CBDs will have to reinvent themselves to a certain degree. And we've seen this happen many times before. The CBDs will never be redundant, but they will need to reinvent themselves to maintain their viability, because I don't think we're never going to go back to the way things were completely. The changes that have happened for clear reasons, and some people just won't go back. But the jobs nodes, we already had a situation where change was happening before COVID came along. It used to be that the CBD was supreme. People shopped there, everybody worked there, but that's no longer the case. People shop now in suburban shopping centres. A lot of people have suburban offices. And one of the things we've seen with more recently is with technology and the way that people shop. More people shopping online. So we're seeing this massive expansion of industrial property, particularly warehousing, created by the fact that people are shopping a lot more online and will continue to do so. And so the people providing for that, like some of the big name Amazon type people of this world, they have massive warehousing needs. And so in the case of Sydney, that's out sort of Eastern Creek, where there's an intersection of two major motorways, for example, the two of the M's intersect out there. And so that's become a huge jobs nodes. In the north of Adelaide, there's massive sort of warehousing distribution centres up there. And that's where we're seeing some of the big growth in rentals and property prices in that very strong Adelaide market. And so that's a trend. I think it's going to continue. So we're going to see jobs nodes in places like that. New airports, Badgerys Creek is going to become a massive, massive job node. The biggest jobs node in Brisbane isn't the CBD, it's what they call the Australian Trade Coast Precinct, which is the commercial industrial businesses that surround the airport and the seaport, which are located in Brisbane quite close together. And that's a huge employment zone, much bigger than the CBD. So that's where we're going to see the jobs in the future.
Interesting. Okay. And I think following on from that, I guess the question for both of us to answer is, what impact is that going to have on both the residential property market and the commercial property market? So from my perspective, working from home and the value of a particular residential location, it really comes down to one word, and that's amenity. And amenity means access to public transport. It means access to great education facilities. It means access to recreational facilities. It means, if you want to go back to the old movie, The Castle, the vibe, right? The feeling of community that you get within that residential location. So it's not just that buying a property near the particular industrial zone will deliver you a fantastic outcome. It actually may be the wrong location because you're going to get industrial noise. So I think what we're saying to the viewers here today, Terry, is you've got to be very not blinkered in your view about taking one particular growth driver and applying that to your property investment formula. There's a number of factors you've got to consider. So people are still willing to drive, 30 minutes to a job. They're probably less willing to drive an hour and a half like they used to. So someone living on the central coast of Sydney probably won't commute nearly as much as they would in the past because they realise they don't have to. But I think all of these factors play a role in determining your particular home ownership strategy or investment strategy. And I think with commercial property values too, Terry, definitely the working from home is having an impact. Some of the big groups, the commercial developers like Dexus, are creating what they call collaboration hubs in their offices. They're actually, I just went and visited CBA's head office the other day. They've done a beautiful fit out, and it's actually a really attractive space to work in. So a lot of the bigger employers are having to make their offices a much more attractive place to work, where people go, actually, this is much nicer than home. I'm going to come in more often, you know. So those kind of factors. So I think there will be a few wobbles with commercial values, but also the value of, as we talked about, industrial property. The value of even suburban offices will continue to hold up, because often people want that work-life-home separation. So there's quite a few things that I think need to be considered in your strategy.
Yeah, I think that's right. While you're talking, I was thinking about two daughters, both at university. One thrived in the work from home environment when universities haven't been functioning as normal. The other really struggled because needed the class environment, the interaction with other people, and be able to interact on a personal level with tutors and other students. And I think it's the same in the work environments. You know, the work from home thing isn't going to work for everybody. Some people need the stimulus of the office and the interaction with their fellow workers.
Well, I think the introverts loved it and the extroverts hated it, you know, so there's got to be a happy medium between the two. So,
yeah.
Look, Terry, I'd like to move to the next topic around rental vacancies and rental rises going through the roof. And we did touch on a bit of this. So I guess a couple of key questions, Terry, is why do you think the vacancy rate is just so low in most areas of Australia? It seems like an unprecedented situation at the moment.
It is unprecedented, Rich, and it's actually developed over the last, I think, 5 years. It's and to a certain degree, it's don't get me started, because it's one of my hot topics. Look, politicians.
That's why I've asked it, because I want to see a bit of passion. Come on.
Look, it's been caused, like so many of the problems in the property industry, it's been caused by stupid bloody politicians and their policies and decisions which haven't been thought through in terms of consequences. You know, we've got builders going broke in a building boom because we had a federal government that implemented a grant to encourage people to rush out and build new homes, but didn't actually ask the question, will there be enough bricks or will there be enough bricklayers? And as it turns out, there weren't. And so it's created shortages and cost escalations, which has sent builders broke. So with the rental shortage crisis, and it really is a crisis across the country, when, you know, 3% is a balanced market in terms of vacancies, 2% is a shortage, 1% is a crisis. A lot of places around Australia, 0.3, 0.4%, that's beyond crisis. And it's evolved over the past 5 years for a series of decisions by the federal government, you know, disallowing depreciation claims, that, you know, discouragement to property investors. Because the situation is that a third of Australian households rent, and more than 90% of the properties they rent are provided by the private sector, not by government. So for all these various decisions that have happened, federal government, APRA, state governments, that have discouraged investments, little by little over the past 5 years, the supply of rental property has diminished, because more and more property investors have sold in this recent boom. More property investors sold than bought. And so vacancy rates have dropped and dropped and dropped because the supply of rental properties from private investors has diminished. And so now we're in this situation, you know, we've still got state governments implementing new laws that disadvantage landlords and advantage tenants. We've got Queensland, for example, implementing a new land tax regime, which is going to, I think, stop people from investing in Queensland. And we're starting to see now lots of references in media to what happened in Ireland, because there are parallels there, except they went a lot further than Australia's gone so far. And so many decisions were made in Ireland that were just totally onerous to investor owners, that they'll end up with something where there's just nothing available for rent, because you know, they increased taxes, they disallowed tax deductions for investors, they implemented a rental freeze, all these things that were just completely onerous to property investors, and they've ended up, the entire nation, so we're told, only has about 700 properties available for rent at this point in time, which is ridiculous. Australia's heading in a similar direction, and if politicians don't soon realise the consequences of the decisions they're making, we're going to end up with an Ireland situation.
Well,
great for investment.
I think Terry, you're right. I can jump in there. I think there's kind of two choices that the government has. Essentially, they can have policies that enable and encourage private citizens to invest in housing for rental purposes, or the government can do it themselves, right? The problem with the government doing themselves, one, they don't know where to put the right properties and the right kinds of properties. And we've seen when governments try to provide public housing, the delivery and everything is very slow and very costly, and it's very inefficient. It's far better to have a tax attractive environment and the right incentives to create private citizens to invest in rental properties. So it's, you know, it's the average mum and dad. It's not big corporations. Yes, some big corporations will do build to rent. In fact, if they keep having restrictive policies, it's just going to favour the large corporations from building these kind of things, right? So unfortunately, a lot of the policies are very detrimental to the average investor. But the way I look at it myself, like you, Terry, you know, I've bought 2 properties this year. I'm ploughing ahead, regardless of Queensland's, you know, tweaking at the edges with land tax or whatever they do on depreciation. I know that the governments that will change, and that generally economic rationalism should hopefully flow through. There obviously needs to be a safety net for those that are vulnerable, particularly for homelessness, which I think is out of control and going to get worse in this country. But we definitely need to have a situation where the right taxes are put in place, not to disincentivise, but to incentivise private investment.
Yeah, that's right. And it's counterintuitive to a lot of politicians, but what they have to do is actually encourage, and as you say, incentivise people to become property. And they've been doing the opposite for 5 years. But you know, there's no way government can fill this gap. In Queensland, there are someone else, Simon Presley from Propertyology, in fact, came up with some figures, 620,000 properties rented in Queensland. Over 500,000 of them are provided by ordinary mum and dad investors, only 8% by government. So if government was to replace that, they're going to have to come up with 500,000 new dwellings in Queensland. Imagine the cost, 500,000 times $500,000 each, for example. What does that add up to? Do the sums. I mean, they don't have that sort of money. They've got a budget deficit problem. But they have, the only way they can solve this crisis is to stop treating property investment as something akin to a criminal activity, and actually something that actually has a social purpose, and that they need to encourage through tax incentives, for example.
That's it. So Terry, I'm just going to put up a slide on rental rates at the moment from CoreLogic. And every time I put up this slide, it keeps going up. Last time I put it up, it was about 9.2%. Now it's at 10% nationally. And this is across all capital cities. But if you look at the individual cities, we've seen an 8% rise in rents. Darwin, 5%, Hobart, 7%, Perth, 8.5%, Adelaide, 12%, Brisbane, 13.3%. And in fact, Brisbane, in my view, is going to be the standout. It's actually predicted to go to 20% this year. Melbourne 8.5%, Sydney 10.4%. You know, I know that's true because I've just put up all the rents on my properties quite significantly and without any problems or risk of having a vacancy on these properties. So so for me, what's driving this rental crisis is we're not building enough properties to satisfy demand. How far can these rents keep rising? Well, that's just going to be a function of the market. If we're going to have people continuing to have babies and natural population growth, and then on top of that, we're going to be having an increased number of migrants coming into this country. I think for a lot of investors, Terry, they're going to need to change their mindset. Instead of chasing capital growth, which is absolutely fundamental, they should also have a big focus on rental yield and cash flow. I mean, this year alone, if you were to buy a property in Brisbane, wow, you're going to make, you know, potentially a 7% increase in your rental return. I mean, that's fantastic, right? It's going to certainly help to alleviate all of the interest rate rises that you're getting on your loan. But that's a phenomenal result. Would you agree?
I do agree. And it also occurs to me that many of the places where you might buy because they have above average rental yields are also very good places to buy for future capital growth. You know, you can have both. And Brisbane would be a good example, but there's many good regional markets. I think Adelaide and Perth, for example. Darwin never gets talked about, but it's got the highest rental yields of capital city Australia. I'd also point out that the figures you put on the screen from CoreLogic, there are other figures, for example, from SQM Research, Louis Christopher's organisation. They're actually larger numbers, and their research in terms of how much rents have risen in the past 12 months. But I think it's going to continue because, as we said before, the rental shortage is going to get worse before it gets better. The increase in migration is one factor, but also another factor we haven't touched on is that many major developers are actually cancelling or deferring big projects because of the escalation in construction costs, and the numbers don't stack up so much anymore, and so they're deferring them or scrapping them. So that's going to further diminish supply, and so I think this phenomenon of rents rising will continue, and that represents a great opportunity for investors. Coupled with the fact that, because the heat's come out of some markets at least, that the buying's a little bit better than it was. So you put all those things together. It's a time of great opportunity for investors who can avoid being spooked by all the negative media.
That's it. The other thing I'll just point out, you just talk about the shortage of properties being built, but also just the number of properties being listed for sale, Terry, is, again, going back to CoreLogic data, comparing to the last 5 years, the number of total properties for sale is down almost 22.5%. So a lot of vendors are just holding off selling, and people are just holding properties for longer, either for whatever reason. So, to get more properties in the rental pool for investors, trying to buy established properties is challenging. The way we overcome that as buyers agents ourselves is by tackling the off-market property. We access a lot more properties than you would see advertised on Real Estate in the Main, just simply through our connections. But yeah, that's a bit of a worrying trend line to see that listing volumes have been so low. So what I'd like to turn to now, Terry, is just, I guess, how deep are the downturns? And I'll just start this off with a slide. I'll just bring it up for you, and then I'll throw to you in a second. So Dr. Nicola Powell from Domain, she's the senior domain economist, did an article and a survey recently, bit of analysis, just looking at the downturns the cycles from back to 1995 right through to the current day, and just compared the depth of the downturn to the depth of the height of the upswing. And the basic takeaway here is that, the downturns are never as big as we seem. You and I, Terry, have been through a lot of cycles. I think our lack of hair or our greys can helpfully share a bit of wisdom with the viewers today about what happens during these cycles. But let's have a discussion around how deep we think this next downturn will be. And you can see here, back in 2004, 2008, we had a 4.7% correction. 2008, 2011, 4.5%. The 2015 to 2019, almost down 8%. Now, I do think this current cycle will probably be one of the deepest we've had. I think it could be potentially a 15 to 20%. But when you look at that in the context of how large or how big prices have risen, anywhere from 35 to 40%, it's pretty natural that it's going to come back maybe 15, maximum, say 20%. But what the interesting statistics, I didn't actually put it in the chart, but basically prices have to go back a very, very significant amount to get them back to pre-COVID levels. And I don't think they're going to go back a full 25%. So I think as much as the banks and the other economists will try to predict it. In fact, Terry, I'll let you talk about that, because if you want to share your screen now on those slides, why do the economists get it so wrong? Why do they keep saying that the market's going to tank and all this is going to happen?
The short answer is because they're idiots. But really, I don't think they have a very deep understanding of real estate markets, residential property. They should do, but they don't, because they're not actually specialists. The high-profile economists who are often in the media, including the ones from the big four banks, they don't spend 24/7 studying and analysing residential property. That's what we do. I mean, you're living and breathing it 24/7 with your business. I think the understanding that you have and that we have is far greater and deeper than an ivory tower, big bank economist, quite frankly. And they tend to have a very simplistic view of real estate markets. They think that really the only factor in play is the level of interest rates. We had a boom because interest rates were at record lows, very simplistic and just plain wrong. And now because interest rates are rising, we're going to have a crash. That graph you just had on the screen, I would point out, the biggest boom we actually had in that phase that they showed, the biggest, highest green thing on the graph was, okay. Yeah, 2000 to 2004. And then followed by 2004 to 2008. That was a period of great uplift in property prices in Australia. I'll point out that happened at a time when interest rates were rising. In fact, the interest rates increased. They were much higher they started out much higher than they are now. People were typically paying around 6.5%, 7% on their mortgages then. Interest rates went up over a period of years until mortgages are about 9%. And through that period, we had those spikes in property values.
I remember paying 9% somewhere between 1995 and 2000. I remember then paying 8% around that period of time. You're absolutely right.
And so this notion that rising interest rates and higher interest rates means property prices will crash, I think it's just plain false, based on what's happened in recent history, including in particular in the late 1980s. That's not on this graph, but I'm old enough to have been paying 17% on my mortgage. Now, through that period, everyone was paying double digits and interest rates kept rising and the boom kept raging. I think the downturn that we're seeing is actually not, I don't think, caused by the fact that interest rates have risen. That's what media is telling us, but I think they're wrong. The analysis that we do, and we do it every quarter on sales volume, shows that the markets that have dropped, particularly, say, Sydney, parts of regional New South Wales, the Sunshine Coast has come off the boil. Those places were actually trending down long before interest rates rose. And Sydney peaked, by our numbers, in terms of sales volumes in the middle of last year. It was fading in the second half of last year. In the March quarter of this year, it dropped a lot. And that was pre-interest rate rises. And there are other examples of that around the country. So keep that in mind. I think this downturn was actually underway before interest rates happened and in the places where we've seen interest rates fall. So we're just going to talk about, let me just get that happening properly.
You just want to minimise your Q&A box there too, Terry?
What's that?
It's all right. It's all good. It's on my screen. It's all good. Sorry.
Okay. We just want to touch on the forecast we're currently seeing from the usual suspects, as I call them, talking about property prices are going to fall 15, 20, 25% because interest rates are rising, and just examine their track record in forecasting so that people can get some perspective around that. So we're seeing headlines like this: ANZ predicts epic national property price crash. Well, actually, they're not. That's not what they're predicting at all, but that's what the headlines are saying, because media does tend to go for the negative sensation. So ANZ forecasting house prices to drop 8% this year, but more in Sydney and Melbourne, and more drops next year. Westpac, they're saying property prices in Sydney and Melbourne will fall 18% in the next 12 months. CBA, the Commonwealth Bank, Gareth Aird, head of Australian economics, who in my view is one of the worst forecasters in the land, is forecasting that house prices will fall 15% by the middle of next year. And so we're seeing these headlines pretty much every day. And it's quite alarming for people to be told that their most prized asset is going to drop 15 or 20% in value. I think it's often wonder why they make these forecasts or why they publish them, because it doesn't serve any purpose that I can see. But the most important point is to look at their track record. We could go back further, but let's focus on what they were forecasting about March, April 2020, when COVID first struck, and there was a lot of panic. And we saw ANZ at that point predicting in the next 12 months in 2020, they predicted property prices will fall 13%. Shane Oliver, always in the media, AMP Capital chief economist, he predicted at that time that house prices would fall 20% in 2020. Louis Christopher said could fall 30%. Gareth Aird from Commonwealth Bank, had a range of scenarios. His worst case scenario was that property prices would fall by a third in 2020. I mean, a ludicrous prediction. It's never happened in the history of the world. Certainly not in Australia, but nowhere in the world do I know where prices have fallen that much ever. National Australia Bank got on board. Bill Evans from Westpac, they're all predicting big drops in property prices. Digital finance analytics, which gets way more publicity than they deserve, were saying that there was a big chance that
he's the ultimate bear, Mr. Negative. Yeah.
Well, you know, he's got a bit of a grievance against real estate for some reason, predicting that property prices could fall by between 30% and 45%. And UBS is also a bit of a bear when it comes to property prices. They're going to fall 20%. So lots of big forecasts from some very high profile media darlings as a result of the onset of COVID. So what actually happened? Well, in 2020, prices nationally rose 6%. In Canberra, they're up 9%. Hobart and Darwin both rose 12%. And some of the regional markets were up sort of 9, 10, 12% as well. So we actually ended up having a very positive year for real estate growth. By recent standards, that was wonderful, wonderful growth, but totally in contrast to what was forecast by what I call the usual suspects. And some people did get it right, but they don't tend to get the press because the media loves the negative, sensational forecast. So people like ourselves, of course, give ourselves a little bit of credit. Simon Presley, he's a very good analyst, very good researcher. Stephen, I'm not even sure how to pronounce Koukoulas, but he's a very sensible voice. I would point out also, Rich, that right now in the media, because we delve into media every day for our research, and we're aware that there are people out there saying, hang on a minute, these forecasts are ridiculous. People like Nicola Powell from Domain, for example, their head economist, is saying, look, we just don't think that things are going to be nearly this dire, but they're not getting the same amount of media coverage because media loves the people who make the sensationally negative forecasts. So the public's not hearing about these more moderate forecasts that people are making. And these people like Simon, Stephen, James and ourselves at that time weren't getting the media that the doomsdayers were. So if we fast forward to from 2020 to the start of 2021, and now it became clear to even the pessimistic bank economists that property prices were rising, but their forecasts for 2021 were very, very moderate. They were forecasting, for example, ANZ house prices to rise 9%. NAB said house prices in the capital cities would rise just 5%. Gareth Aird, again from Commonwealth Bank, he was forecasting 8% for house prices, 5% for unit prices. Shane Oliver said house prices would rise 5%. Bill Evans was even more bearish, 4%. Et cetera, et cetera. Core Logic, they're in the media every single day. Media tends to think that anything Core Logic said is gospel, despite everything. And so prices, they predicted would rise maybe 7 or 10%, one of the more bullish predictions. So what did we get? In 2021, prices rose 25%. Sydney was up 30%, Brisbane was up 30%. Regional markets were up by similar amounts. Regional New South Wales, 31%, in fact. Look, those forecasters did not see it coming, Rich. We certainly did. We could see it building. We could see all the pressures that were in the system. It wasn't about low interest rates fundamentally. There was all these other things like government stimulus, people coming, expats coming back from overseas. We had sort of 16 dot points on our list of factors.
Exactly. Yep.
But those forecasters that get so much credibility in media, including right now with their negative forecast, they did not see this boom coming.
That's right. Well, I think the other factor was lockdown. And, for Melbourne, it was the worst possible lockdown. But for the other states, it was still significant. And the lack of stock, all of the COVID factors had a huge impact. People wanting to upgrade their home because they were spending a lot more time at home. And all those other factors that we don't have time to talk about today. All had a huge impact on the market. So I think a lot of the takeaway message from this, Terry, I think is, again, don't make your decisions about property investing or timing of when to buy your next home purely on media headlines. You've got to really understand what it is that you want for your future, future-proof your future by getting the right experts around you and make a long-term decision.
Yeah.
I sort of even think about myself. Could I have bought my property that I bought 3 months ago? Could I have bought it cheaper today? It doesn't really matter. Even if I could get it 2 or 3% cheaper, I might have. I'm buying for long-term value. And I think economists, and I'm talking to myself here, economists have got to understand the difference between price and value. You know, economists always read the menu from right to left, unfortunately. But you've got to look at the value of the thing you get. What's the value you're getting from buying a property today? The beautiful thing about buying today is there's far less competition. And this is not just a pitch, right? This is just the fact. There's a lot less competition. The opportunities are much better out there now than when everyone else is scrambling at the bottom of the market to get in. So the savvy buyers really do get ahead of the curve. The other key factor overlaying all this is borrowing capacity that I've talked about a lot in my blogs and my other types of things. And your borrowing capacity is critical, and it is going down every month that interest rates go up. So if you have borrowing capacity now, my advice is use it or lose it, because you will be crimped in what you can afford to buy. Even though you want to get into a good market, you're far better off to not extend yourself, but get the best possible quality loan you can, because the banks have stress tested your capacity already, Terry. But what would be your takeaway messages, Terry, from what you've just said there as well?
Yeah, look, I think people should see the comparisons between sort of March, April 2020 and now. Similar media forecasting big price decline. At that time in 2020, I went out and bought a couple more investment properties. And in the 2 years since then, the growth in rentals and the growth in values has been prolific. And I think similar opportunities exist right now for people who can just tune out all that media white noise, see the opportunities. Not everywhere. The market now is more segmented, but the opportunities to get that kind of growth still exist. If you can just, people have to think and act independently. Unfortunately, most people, I think, are herd animals, and they'll follow the herd, which is usually stampeding in the wrong direction, unfortunately.
Yeah, great call. Terry, what I'd like to do now is we'd like to, just in a moment, start a Q&A session, which we'll pull up the Q&As and we'll just go through them. And if anyone's got Q&As, please write them in the box and we will get to them all. We do enough time to get through them all today. But just before we do that, I'd just like to mention how we operate as buyers agents. Obviously, hosting the webinar today, we'd certainly love to help educate you and potentially help you on your property journey. So these are the kind of steps that we take for our clients to help you move forward. What we do is sit down with you, have a discussion about your future goals and needs, and then come up with a recommended strategy. Then we find an individual property location, a location and a property type that will suit your goals. And then you work one-on-one with our buyers agents in that localized area who's got specialist knowledge to help you find the best possible property. We have a 6-month agreement, but we are fairly efficient at finding properties and typically take around 30 to 60 days to find the ideal property that fits your brief. When we've found the right one, and again, it's an iterative process, it's not necessarily the first one, it might be several properties we've got to go through. We do a detailed appraisal. We tell you what it's worth. We give you independent advice on its value. We then analyse that. We then step in and negotiate on your behalf, conduct all of the due diligence that's needed, organise contract review, pest and build inspections, and then we coordinate exchange and settlement. And for our investors, we also recommend a local property manager. Now, to do all of that, the benefits of doing that kind of process, as I said, is a couple of things. One is that you get that really, really great local advice. You're getting someone who's working on your side, who's a professional, who can help you understand the local market. And my team are fantastic negotiators. At the moment, we're saving anywhere from 2 to 10 times our fees. So it's a really great opportunity to get in and get at a better price and get someone else to help you crunch the numbers and tell you what it's really worth. In terms of our fee structure, we work on a fixed fee structure. So it's per price band. It's the equivalent of between 1.5% to 2%. So in the context of buying that property, it's a great investment in that localized knowledge and having an expert to help you make the right decision. Making the right decision is what we love to do for our clients. You know, we've been in business 21 years and we certainly know a thing or two about property. So my details are on the screen, but I'll jump off there because we will send around a copy of the slides as well. But Terry, let's dive into all of the Q&A. This is the part I love the most. We'll start with Dean. So Dean says, how do people afford to move here knowing how expensive Australia is, let alone historical vacancy rates? So how do people afford the rents, Terry?
Yeah. Well, look, I don't think Australia is, particularly expensive compared to other parts of the world. I know sometimes the media, there's a particular report that comes out once a year called Demographia, tries to claim we're the most expensive and least affordable place on the planet. It's just not true. There's some people who will be coming to Australia aren't not necessarily people coming as refugees from third world countries. They're talking about bringing in skilled migrants, and quite often they'll be coming from places that have comparable sort of property prices. The low vacancy rates is a factor, no doubt, and that's something I don't think the politicians have considered. I mean, nobody seemed to raise that as an issue in the talk fest that they had at the Jobs Summit. It's good that they had it, and it's good that they've come up with a solution, but they need to go further and think, what are the consequences? And one of the biggest ones is that they need to ask the questions about is where they're all going to live. And
I think the question about its affordability, if people can't afford to live in the cities, then they live in the outskirts or they live in the regionals. It's just simply going to be where people decide to live will just simply be a function of income. And that's why those more affordable fringe areas will continue to be a good place for both buying and investing.
They're not all going to be living in Sydney. I mean, there's plenty of other good cities that are, a fraction of the price. Adelaide, Perth, Hobart.
Yep.
So, yeah.
Cool. Yep. Okay. Next one. Malay has asked, in the light of new proposals made by the Greens, do you think the government can impose new rules where they can treat the private assets as theirs and call out rules of the game? Look, the proposal by the Greens to freeze rents is just complete idiocy. I'm sorry, but that's just a crazy policy. They're actually going to hurt more renters than will solve problems. That's just the complete opposite policy. Again, any new policy has to be debated by both sides of government. But unfortunately, this land tax, I think there's another question coming up. I actually think it probably won't last more than a year or two. I think they're going to find the logistics of collecting this tax very, very difficult. And I think all the other states are probably sitting by, but it's really tantamount to double taxation. It's ridiculous that Queensland is using the threshold in other states to then bump up their own tax coffers. If the other states did the same, then it'd be triple or it'd be almost 7 times taxation if you had a property in every state. So I think it's just, honestly, I almost think it's unconstitutional, Terry, but I don't know how we're going to fight this,
Well, I do, and the resistance is growing daily to it. I think it's unenforceable. It seems like they're going to be reliant on individual investors volunteering the information about what they own and where they own it. I'm certainly not going to volunteer any information, no matter how many letters they send me. I think it's none of their bloody business. So I just don't know how they're going to enforce it. But beyond that, it's going to be, if they ever did, it will be bad news for people trying to find a rental property in Queensland. Yeah,
okay. Normie's asking, where are you recommending or where are you targeting for? It's a bit asking you, where's the gold? I think my just comment before you answer, Terry, is there's no one size fits all. Just because Terry's buying in that location doesn't mean, Normie, for you, it's the best location. So you need to really sit back and the better question is, what's your goals? What's your affordability? And what are you trying to achieve? And then both a location and a property then will determine. But Terry, just how would you answer that question?
I'd answer it in the very same way, because I kept getting in various forums asked the question, where's the best place to buy? And I said, there's no right answer to that. You could have 6 people in front of you and there'll be a different answer for all 6 of them because of what you just said. It depends on the individual circumstances, including what they already own, because where I've just bought is dictated by my choice of location, partly by what I own and where I already own it. And my next choice will be, I like diversity. I want to have a portfolio that's spread around the country. So the next one won't be in Queensland. I could spend an hour answering this question and we just don't have time to do that. I think Adelaide's great. I think Perth has got great prospects. There's lots of regional markets around the country that I would consider, like Tamworth in New South Wales, which I think has got really good prospects. Many others.
Okay. Similar question for Maria is asking in Victoria, what cities or towns are good to invest in the next 6 months to 1 year? I mean, I'll just answer that to kick off, Terry, is some of the areas that we like. Even the city fringe for some apartments we're finding has actually come back with good value, not in the CBD itself, but some of the city fringe suburbs for apartments. Other areas we like is the Bayside areas, down toward Frankston, Langwarrin, Carrum Downs, where you can get sort of good 3 and 4 bedroom homes for sort of 600 to 800,000. We think they're a really good investment long term. But what would you say, Terry, for Victoria?
Yeah, no, we've just finished analysing the whole country as we do every quarter in terms of sales volumes. Melbourne's a lot stronger than the media coverage would have us believe, particularly those cheaper areas. So the outer ring areas, some of the ones you've just mentioned, are still as strong as ever. And the rental returns are better there as well. But beyond Melbourne, I think that, think about the 2026 Commonwealth Games and what's that going to do to pump up the places that are going to be hosts. Ballarat, Bendigo, Geelong, they've been strong for 4 or 5 years, but they're still pumping. And there are plenty of other places. There's lots in the north there. There's lots of really good lifestyle towns. In Mitchell Shire, in Mason and Ranger Shire, in between those bigger cities like Bendigo and Ballarat, and still within striking distance, whether by car or by train. Right. Centre of Melbourne if you need to go there.
Excellent. Jason's asking about the future of Brisbane compared to other states, and also is the Queensland land tax going to dampen growth? Look, I think the land tax will definitely put question whether people go there, but honestly, I think Brisbane has a very, very bright future. Every time I visit Brisbane, I actually really love it. It's a great, thriving city, wonderful culture. It's got a lot of upside, Terry, not just the Commonwealth Games and the Olympic Games coming, but just the whole proactive development and sustainable development that's been there.
Brisbane has become a wonderful city. I've had a couple of friends who have visited Brisbane recently who haven't been there for a while, including one who used to live there like 20 years ago, and just stunned at the transformation of Brisbane. It is a real lifestyle city. It's got so much to offer. And we love a weekend in Brisbane because there's so many wonderful things to do. But beyond that, the infrastructure spend is elevated. Even before the Olympics announcement, there's a lot being spent in and around Brisbane on new infrastructure, big projects, creating jobs. It's still, even though it's had price growth recently, it still compares very favourably from an affordability viewpoint to the bigger cities. It's still got that, that climate factor. It's warmer than, say, Melbourne. Queensland generally just will continue. The population number shows that Southeast Queensland is the biggest target for internal migrants in Australia. I think that will continue.
Definitely. Gurav is asking, what are your thoughts on growth going forward, given wage growth is sluggish, immigration's ramping up, and interest rates remaining high? I think, Gurav, again, as we've said in our presentation today, we're not going to be expecting spectacular price growth in the next 2 to 3 years. But what you can do is consider your long-term strategy. And if you are looking to buy a property, getting in while the market is in a negative sentiment phase, that's a really good phase to be in. And you know that the property growth will rebound at some point. I can't tell you that it's going to happen in December 24 or January 25, whenever it's going to be. But we know that we are going to be heading to this next phase of an undersupply in property in light of our population growth and other things that are happening in Australia. So I'd take a more positive than a negative aspect. Glenn, we've already sort of pretty much answered the land tax, and yes, I do think it is bordering on unethical. This one, Terry, I want to answer together. Are apartments going to be in decline going forward in Sydney and Brisbane? Any capital gain potential next 2 to 3 to 5 years? Affordability, shortage, and commute times being key drivers. So my answer to that is yes. I actually think apartments will swing back into much more high demand, particularly for those that want to live in those high amenity suburbs and they can't afford to buy a house or a townhouse. So I definitely think there'll be some growth opportunities in the apartment market. Terry?
I totally agree. In fact, I think that's already happening. As I mentioned earlier, every 3 months we look at sales volumes for every town and suburb in the country. We analyse, because we think it's a forward indicator of what will happen with prices. It's been shown to be so. And one of the trends we have seen emerging in the last 2 quarters is that there's been an uplift in those areas that provide attractively priced apartments in attractive locations. So there are many suburbs of, say, Sydney and Melbourne where the median price for a house might be $2 million. The median price for an apartment in the same suburb is like $600,000. And I think more and more people are looking at that and saying, well, we're going to take the apartment option. So we've seen actually uplift in buying at a time when we're told that everywhere's falling. It's not true at all. I think there's more locations around Australia where markets are still rising in terms of activity than there are those ones that are falling. But the places that we're seeing significant uplift include the city of Melbourne. All the suburbs of the city of Melbourne we classify as rising markets based on sales volumes. Places like Inner West and Sydney, there's still quite strong buying activity there. And these are places that have those attractively priced apartments compared to houses in the same area. Central Perth, central Brisbane. Brisbane's dropped off overall this year, but those inner city suburbs that have apartments, sales activity is as strong as ever.
Yep. Excellent. Another one from Maria. She's asking, concern about mortgage rates might affect rental income. What's your advice to property investors whose rental income may not be sufficient to pay the mortgage due to increasing interest rates? So firstly, Maria, is talk to your property manager and get them to give you an independent rental assessment. Look online and see what other comparable properties are renting for. And that way you've got a bit of a picture as to what sort of rents you should be getting. And do not be afraid to ask for a rent increase. I've just increased a rental property of mine in Queensland from $550 to $700 a week in rent. So it's $150 than compared to what I was getting. And that's a fantastically positive cash flow property now. Now, there was many years where it was sluggish. The other thing you can do is perhaps give your property a renovation, add an air conditioner, which might give you $20, $30 a week more in rent. Repaint the kitchen or do something to add value. If you can add a granny flat, wonderful way to do things, but you've got to have the cash to do that. So there's a number of things you could do to consider, but don't panic sell would be my other advice as well. One for Moreo here. You mentioned rentals have gone through the roof. We've not seen that in the Sunshine West in Victoria. Can you comment as to why? Terry, do you want to have a crack at that one?
I would have to go away and have a look at some of the vacancy rates for that area. But off the top of my head, I can't. Most locations in Australia, vacancy rates right now below 1%, and rents are rising. The Sunshine Precinct, that's the local government area of Brimbank and the sort of middle ring west of Melbourne. Vacancies may be a little bit higher there, and that might explain why rents aren't rising to the same degree.
Cool.
But I would need to look at the numbers.
Sure. Okay. Just a couple more, then we'll have to close off in a few minutes. But compared to residential property and commercial property, which is better in terms of capital growth? Well, tough question to answer. Again, it comes back to your individual situation. But my general advice to this person would be, I would consider to get 3 or 4 residential properties in your portfolio before you start considering commercial property, simply because there's higher risk with commercial in terms of vacancy rate. I'd much rather see an investor that's really building a portfolio, build a bit of a nest egg, get some sustainable equity under your belt before you go into commercial property, because you often need a larger amount to get into a good quality commercial. Not saying you can't buy smaller strata commercial suites, which can work, but just with the economy and vacancy risk, it's a much bigger risk to consider. We've got another comment from Sarath. What's the interest rate outlook for the next 12 to 24 months, and how do you prepare to hang on to your portfolio? Well, I guess my view, Terry, of where the rate will end up, I think it'll end up somewhere between 2.75 and 3. I'm a little bit more conservative as to how high the cash rate will go, because I'm starting to see that inflation is coming down. I mean, we still haven't hit peak inflation yet, but some of those supply pressures, from what I'm reading, will be moderated, and we're not going to be as bad as what we thought. How do you prepare? Well, obviously, hopefully you've got a buffer. If you haven't, try and get an offset account where you can have some extra cash in your buffer account, and just budget. Literally get your spreadsheet, review your numbers, and make sure you're not spending more than you're earning, and really budget for an extra, couple of % rise in interest rates just to be super safe. What's the next one? Bill's asking, Terry, speak about Queensland land tax, how it affects someone that owns one property. Okay. Do you want to answer that one from Bill there, Terry?
Yeah, well, I mean, it hasn't taken effect yet. If it does take effect, it'll be July next year. I think there's a lot of very turbulent water to flow under the bridge before it happens, and it may never happen. If it does be implemented, people who own property interstate could end up with a higher land tax bill. In fact, it could be considerably higher. But of course, the Queensland government is going to be reliant on you to volunteer the information about what you own in other places. And that's problematic. So I'm not quite sure how they're going to enforce it, how they're going to make it work. The other thing to consider, and this is, I'm not competent to give this sort of advice, but here's a suggestion: talk to your accountant or a property lawyer about the entities in which you own properties, because that can be a way around the problem. It's certainly something that I've considered myself, but you need to get proper advice on that.
Yeah, excellent suggestion there, Terry. And just the last one for Sarath, can you recommend mortgage brokers to optimise borrowing capacity? Yeah, oh, look, we have a number of really great brokers that we work with. We've probably got some on the seminar today. But look, please reach out. Very happy to refer you to those brokers. And I definitely use a broker myself, and they do a wonderful job. They really do. You don't want to be spending all your time chasing down the banks. The brokers that are good can really quickly assess your borrowing capacity, put you with the lenders. And for those that are struggling, there are second-tier lender and non-bank lenders. So there are other options you can consider to get your finance with. So don't, just because the bank says no, don't give up. Often it's the challenge of, half the challenge is getting the finance. The other half of the challenge is actually getting the property.
There's probably a really good point, probably to finish off on, in fact, because everyone's asking questions about, rising interest rates. I think people are actually overrating the impact. We've still got very low interest rates in this country. But be mindful of the fact that while if you've got an existing loan with a major bank, they're going to put the interest rate up, but they're giving better deals for new business. So consider refinancing, because to get the best deals on offer, you will need to refinance. Unfortunately, they give the best deals to their new customers, not their existing ones. And so it's an incentive to delve into that. That's a way to get much lower than the advertised rates at the moment.
Excellent. Well, look, Terry, I just want to say thank you again so much for your excellent wisdom and knowledge and sharing with us today. Thank you for all of our viewers for watching. We will be sending a recording of this to everyone who's registered. So please enjoy watching. If you missed any of it today, you can do catch up. Please, if you'd like any help in buying a property, please reach out to my team at propertybuyer.com.au. We'd love to help you. If you'd like to get in touch with Terry, we'll put all his details there, and you can access all of his fantastic research, independent research and reports to help you identify the locations. We make use of it regularly. But yeah, please reach out if we can help you. Thank you so much, everybody, and I hope you have a lovely day. Thanks again, Terry.
Okay, thank you, Rich.